I don't know if it's overheated per se, because I agree with what Adrian says, which is we're in a paradigm shift. And the way you can tell by that is you actually look at the PE ratios of these companies. Yes, are these companies, growing by 20 billion market cap in a day, and a lot of them are hitting the $1 trillion market cap, seemingly like every other day? Yeah, there is. But what you see is that unlike other bubbles where the multiple expansion is effectively the PE ratio, where the price or the P or the price of the stock is accelerating at a faster rate than earnings. We do not see that in this. Matter of fact, it's actually the inverse, where the earnings are actually outpacing that of the price, which you for certain companies, there's actually a multiple compression despite a huge absolute return. And so, yeah, is it a bit scary? Yes, uh, in the regards that there's a higher and higher concentration of these ultra profitable, ultra high growth companies, while everything else is being lagged behind. That's what I'm concerned about, and also I'm concerned about that. Effectively, this is hardware and semiconductors and energy and memory chips, which are very location dependent. There's a great book called Chip Wars, which kind of lays out how interconnected these semiconductor and effectively this AI trade is across the globe. And so, yeah, if there's any real serious geopolitical risk, and mostly I'm talking about Taiwan issue with China, it could have really catastrophic effects.
Interesting. And Adrian, you were talking about that you think long term it will be fine, and that you were also like not surprised, but like you had some AI trade going on that like kind of hedging you right now against the Bitcoin trade that you're doing.
Yeah. So with Peter's point, the risk that people do talk about with regards to what can really destabilize it, I call it, the red swan in a case of China and Taiwan. So that is an event that can really destabilize this entire thing globally. But also, and I'm not trying to be a doomer here, if China were to make an overtly aggressive move towards Taiwan, we can spiral into World War III very, very easily as a result. So that, I think it is a outlier in the sense of, do I think we're going to see Chinese troops on the ground in Taiwan taking over infrastructure? No. Do I think we're going to see prolonged and more deliberate acts of overt aggression towards Taiwan? Perhaps. But I also think there's a lot of incentive for China to mitigate that and find a peaceful solution. So that aside, coming to your point, because Peter raised a very, very good point. What is ironic about the AI trade is that I got into NVIDIA and MSTR at the same time in 2022. And because of NVIDIA, I've been systematically expanding my allocation into other aspects of the AI trade. And I've been very vocal about that on X. I've talked about, Bitcoin miners. I was never bullish on Bitcoin mining. I was bullish on the HPC AI aspect of it. I've been talking about the cross benefits of how mining would grow into more of an HPC AI play, and that's why I was heavily allocated in 24 and early 25. I've also been allocated towards Micron earlier this year, towards a few other plays earlier this year. It has ironically become larger proportionally compared to my Bitcoin holdings, which I never thought would have happened. But because of the growth we've seen, it has. So my cost basis for Bitcoin is low. Basically, my cost basis for MSTR compared to where it is low. So I'm very much still in a capital preservation aspect when it comes to Bitcoin and whatnot. I'm not selling any of my spot Bitcoin. I've sold in and out of IBIT, but the AI trade and me allocating more capital towards it has been very, very, very beneficial. And I've been watching it in terms of not not the meme-like quality of it. I've been talking about how it should grow out, and I talked about memory like months ago, and I talked about memory last month, and now everyone is seeing, oh my God, memory. So these things are very, very real paradigm shifts, in the sense of people keep calling it for a bubble, but a lot of what Peter pointed out, we're not seeing blown out valuations. We are seeing real earnings, and what we're seeing is the market trying to forward model towards what they think, what the market thinks the market cap will or should or could be. And that's why we saw Micron go from under 100 billion to over $1 trillion. That's why, people also forget SanDisk, they're over $1 trillion. Nvidia's over 5. Google crossed 5, and they're now just under 5 at 4.6 or something. All of Mag 7's over $1 trillion, or multiples of $1 trillion. You got the SpaceX IPO coming that's going to be over $1 trillion. You maybe have OpenAI and Anthropic that can be over $1 trillion. The numbers are so large, not necessarily because of a bubble, but because I think people see that this is a fundamental opportunity to position themselves for the future. It's not like the AI, the internet bubble, where every company had a website, but they didn't know what to do with it. Right now, the more compute you build out, usage is not going down, it's going up. They're behind it. And the reason why the memory trade is so huge right now is that GPUs were the thing. Compute was the main driver of the initial growth. Memory actually saw a massive downturn because they over developed, and they didn't have enough demand for the capacity. Now they have demand that ate up their original capacity, and now they have to build up to meet the demand. So you have two things going on right now. The valuation is catching up to what they already could have accounted for, and now the market is trying to project what they will build into. And this is all coalescing into making the AI trade. People are calling it, circular, but it's reflexive. As NVIDIA grows, the others are going to grow. As the others grow, NVIDIA is going to grow. As NVIDIA and memory grows, so OpenAI and Anthropic and all these other companies will have impetus to grow. It's a very, very reflexive cycle, not circular. So I think that's why it just keeps going.
Yeah, the another thing that we mentioned before this call is the fact that because of these mega trillion-dollar IPOs, as you mentioned, it's SpaceX, OpenAI, and Anthropic. SpaceX for sure. We don't know if OpenAI or Anthropic is going to go through. That's going to, that's potentially a lot of liquidity that needs to come from somewhere, right? And so if people are sitting on massive bags like you are from the AI trade, and I know you're not stupid enough to try to ape into SpaceX, for example.
I'm not touching it.
No, I'm not either. But regardless of these trillion-dollar IPOs, if you actually look at the history of stocks that have IPO'd, they've actually pretty much often signal a local market top. You can, the latest one that I remember, I believe, was Facebook, and they fell really flat on their face in the first year, from what I remember. But of course, they've recovered significantly. So that's, while I'm not personally worried about the valuation part of these AI trades, I am worried about this liquidity drain that can potentially destabilize the market simply because the market is propped up by, probably call it 10 to 20 companies, really.
Yeah, and that's something I posted about too. I think that SpaceX is going to be the impetus or the catalyst for a near-term top. And a lot of people are saying it, and people are trying to poo-poo it, but the sheer size of this IPO is unlike anything we've ever seen. And like you just said, it's going to suck and siphon away capital from everywhere. And the thing about it is that because the market's being propped up, we have two things that can happen. Is it just going to be a shift in the sense of, okay, it's going to get sucked out of Mag 7 and the 10 to 15 associated companies and go into SpaceX? Or is it going to siphon away capital from Mag 7 and those 10 to 15 companies, and it's going to siphon capital from other things as well, causing a broader sell-off of everything concentrating into SpaceX? And also because of the size of the IPO, a lot of funds, a lot of allocations are going to be forced into it just by sheer volume and their mandates. So SpaceX is going to act like a siphon of capital. And to Peter's point, I think it could destabilize the market, but I'm not sure if it's going to destabilize the AI trade. I think it could destabilize everything else. And the capital is going to be sucked in, and then you're going to have a lot of companies that are floundering, that are losing money because their investors are perhaps chasing SpaceX after their investors probably were chasing the AI trade. So, you know, there's just a lot of things that can coalesce. And the AI trade, I don't just think it's speculative chasing. I also think it's because a lot of companies out there are crap, and we don't really need them. We don't need companies that are popping up left and right, providing no value. I don't think the market is harmed if there's a culling of sorts where, longer term, I mean, not short term, if there's a culling of sorts where companies that were just treading water. So like Saylor talks about zombie companies, if they don't go into Bitcoin treasuries, and if they can't, Bitcoin treasury, they can't pivot into digital credit, and they can't pivot into AI, you have a lot of zombie companies right now that are profitable, but they're not really growing. They're just kind of treading water. And unless they find a way to mitigate that, I can see a broader market contraction and concentration, where SpaceX can definitely serve as a near-term top.
Do you?
Yeah. Oh, sorry, go.
Yeah, I was just going to ask, do you see a way where these AI companies that are attracting all this capital and this liquidity, that is there an obvious way that the AI trade eventually finds its way into Bitcoin, or is that not so obvious right now, how that over the near or long term, that capital finds its way into the Bitcoin network?
I think they're two entirely different investment theses, and I don't think they're compatible whatsoever. So a lot of people say that there should be a rotation from the AI trade to Bitcoin, right? Just like they say there should be a rotation from gold to Bitcoin. If you actually look at the data and really model it out, like really rigorously, there's no evidence of rotation. There's evidence of cyclicality, sure, but there's no hard evidence saying that this rotates into that when it comes to Bitcoin. Bitcoin is very, very liquidity driven. Bitcoin is very, very narrative driven, more so than liquidity. So I think what's going to drive Bitcoin is going to be adoption, it's going to be narrative, and it's going to be liquidity. In terms of the AI trade rotating into Bitcoin, what is the impetus for that rotation? So they take the capital out of the AI trade, they're up big. So right, let's say you are someone like me, but much, much larger, or someone that's been even longer than me that has profits from the AI trade, and they want to take those profits out. What is the reason why you would rotate into Bitcoin, besides already being a Bitcoin believer? Because that's something I would do. I would rotate capital into Bitcoin because I've been in Bitcoin for well over a decade now. But the broader market is not going to do that, I don't think. I don't think go ahead.
I guess what I'm getting at, though, is not so much the folks who are holding AI stocks trading out of their AI stock into Bitcoin, but is the rapid growth of investment in AI infrastructure and everything related to AI, does that eventually find its way into Bitcoin? Because, you know, some would argue that the money of choice of future AI agents is going to be Bitcoin, and that might be the way that we start to see the growth of AI reflect in Bitcoin adoption and Bitcoin price. But it's very hard to see how AI isn't just purely pulling away liquidity from what might have been Bitcoin's moment in the sun. Because as you said, Bitcoin is kind of this great absorber of liquidity. But if all that liquidity is chasing at the AI trade, then it's not surprising that we're seeing Bitcoin where it's at right now.
Well, yeah. So let's differentiate that. AI is sucking in capital from everything, right? So Bitcoin is just part of what the capital is being taken out of. If you take a look at the whole market, the AI trade has sucked in capital from everywhere, right? So in terms of liquidity by itself is not enough to drive a trade. So liquidity creates the impetus. The liquidity creates the capital that you need for going into the market, but sentiment and narrative is what creates the impetus for positioning. There's nothing that's going to drive, in my view, I could be wrong, that's going to drive a narrative that says, okay, Bitcoin now needs to get some of this liquidity, that Bitcoin now starts to get some of this attention. There's nothing there at the moment, in my opinion. That doesn't mean Bitcoin is bad. Bitcoin is going to fail. Anyone watching this, that's not what I'm saying. What I'm just saying is, if you take a look at what Bitcoin is, it is a monetary asset. Monetary assets are driven by entirely different things than technological revolutions. Bitcoin has been a technological revolution in the sense that it is a technology. But if you really parse that out, it hasn't been revolutionary enough because we still don't have the rails built on top of Bitcoin to facilitate payments globally. The Lightning Network is nowhere near as big as it should be. Liquid for corporations isn't as big as it should be. There are a lot of things that say that, you know, Bitcoin has been a revolution, but it's been a monetary revolution. And that is fundamentally different narratively and conceptually than the AI revolution. And that's why I don't think there's going to be a lot of capital chasing or leaving AI and rotating into Bitcoin.